Welcome to the Money Insights Podcast, where high-income earners come to learn wealth-building strategies that will take them from high income to high net worth. With your hosts, financial and wealth-building experts, Christian Allen and Rod Zabriskie.
Welcome into another episode of the Money Insights Podcast. I'm Christian Allen. I'm here with my co-host, who we all lovingly know as The Pod. Just The Pod. Rod The Pod, what's going on, man?
Hey, I am doing great.
I heard someone call you The Pod in a comment on one of our YouTube videos.
Okay.
And I just thought, man, just The Pod. There's something powerful just about The Pod, Rod. You are The Pod.
I'm going to own it.
Own it. Okay. How are things going, by the way?
Good. Yeah, things are going really well. So I don't know if I've talked about this, but our son Parker graduated from college, Weber State, in zoology. And he wants nothing more than to go out and hang out with birds.
Wait. Did you say zoology or zoology?
I say zoology. I hear other people say zoology.
Does it have two O's or one?
Two O's.
Well, usually do you call it a zoo when you go to the zoo? Or is it is it a zoo or a zoo?
But I have a hard time getting the ology out of it if I don't. So
okay, zoology. Okay, I get where you're coming from. Okay, I just had to check and make sure. It could totally be me. There could be people yelling into their microphones like, Christian, you're an absolute idiot. Everyone knows it's zoology. I don't know.
The good news is that because that's his degree, I get to hear a lot of people say the word these days, and I hear.
Okay, well,
so
all right.
You're not alone.
Oh, okay.
And I'm not alone. I think maybe I'm just hearing myself say it every time.
All right. Well, we'll have to see what we can figure out on that. Anyway, congratulations to Parker. That's super cool.
Yeah.
You've always got fun family updates going on. I've got little stuff. I do have a daughter that's in a play. In fact, Rod, she'll want me to invite you to her latest play. So that's in a couple of weeks, but I'll get you an invitation.
Yeah, please do.
Okay. Today, Rod, we're going to be talking about why the best investors are contrarians. And I got to say, I feel uniquely qualified to have this conversation because at the very heart of everything that I am a contrarian. I just am. I can't not be. It's just who I am. It's the way that my brain works and thinks. And I love going against the grain. And I genuinely believe that as I've kind of worked with clients over the years, that it's not atypical to see the best investors be at least willing to go against the grain and do things that other investors aren't willing to do. And by doing that, oftentimes they get ahead. I mean, think of it this way, Rod. Just the alternative investment space alone means you're a contrarian investor because so many people just throw their money into the stock market, qualified plans, and kind of, the simplified, I'll call it the easy way of doing it, but it's like the easy, but also not super effective way of doing it, right?
Right. Yep.
So even the people who move into that alternative space, they already have at least a hint of that contrarian nature. And again, we talk about it all the time, but those people, they've crushed it, especially over the last 10, 15 years. Now, the market's done well too. I get it, right? But that's just one good example. And so we're going to kind of go into some of the things that make up a contrarian investor and why we believe that thinking that way can have a powerful impact on the way that we're able to build wealth.
I like it.
Okay, let's do it. So the starting point is, Rod, we've got to think differently. So when I think about that, there's a lot of stuff that comes to my mind, right? Like we went into the alternative stuff. I think about the tech world. There's a lot of people who are kind of set in their ways and just do it. And the opportunities and the way that technology is advancing right now, it creates these opportunities that many people, I think about blockchain, I think about cryptocurrency, all of these different elements. I mean, really, there's 100 things that probably fit into the contrarian investor space, and stocks, bonds, and mutual funds fit into the traditional space.
Yeah.
And so if you're investing anywhere outside of that, you are a contrarian investor. But what comes to your mind when you think about kind of, just this idea of thinking differently and what a contrarian investor actually is?
One thing that I see a lot is in the traditional investing and really with any and almost anything in the investment world is people say, well, I just want the stuff that's tried and true and proven, and then I'm going to get in on that. And the problem is, in so much of the investing world, if you're only willing to invest in the proven, it's too late. Right?
That's a great point.
So it goes back to principles. A contrarian still is going to use sound investment principles. They're just not like willy-nilly out there Wild West doing whatever.
They're like, everybody hates this, I'm in. Yeah, that's probably
right.
not the way to do it.
Right. And so we'll talk about some of those things, but you have to be willing to think, I'm going to use the cliche, outside the box, think differently compared with what other people are doing and have done in the past, because the people who are most successful, they also don't get in a rut on their own. They're contrarian kind of to themselves in a sense that they don't let themselves just only ever go down the same path as they were in the past, because to your point, AI didn't exist, 10 years ago. And so even if whatever was the cutting edge at that time is where you were going, and if you stick with that and now you miss other opportunities, well, again, we're going to talk about principles.
Yeah. So one of the things that came to my mind as you were saying that, and you mentioned it's too late if you decide you're only going to invest in the tried and true. And the thought that initially came to my mind is that even we preach a lot of that. So there has to be some sort of balance, right?
Yes.
To your point, we're not going willy-nilly. We're not trying to say, hey, that looks like a bad investment, I want to go there. Right? We're saying there looks like unique value that other people aren't seeing. Therefore, I want to go there. Yeah. But there does have to be a balance between some of the things that are boring, tried and true, and being willing to, take a step out, show some courage and go for things that are a little bit unique and different that have maybe higher upside potential. And like we always talk about, probably break it down in your portfolio into different elements, places I'm willing to go out on a limb with something a little bit different. And what happens, I think, is that as you get more confidence doing that, then maybe more of your portfolio can be pushed toward that side of things, right? But it really is a balancing act. Now, when we're talking about the tried and true, we're just saying finding good operators who have had, past success, so that you're not just, again, throwing your money willy-nilly at people who may not have any idea how to manage it. Specifically talking about if you're trying to be a passive investor and invest in deals that way. But it could go, this kind of view could look a lot of different ways. And so it's just kind of up to each of us to figure out what makes the most sense for us. But from my perspective, that's how it's happened for me. I get more comfortable in the contrarian thoughts and ideas as I find success with them. And then, you can kind of make those assessments on how far you want to run that direction. But again, the biggest gains, I think everybody kind of knows this, right? Okay. So let's look at a few examples. Let's look up like cryptocurrency, right? So people who adopted cryptocurrency really early made it really big, have made some serious money, right? Like investors who did that, they've done well, even if they've ridden this crazy up and down that has been Bitcoin. Right. Specifically, obviously there's other times, but we'll talk specifically about Bitcoin. It's been up and down. And yet if you started earlier, if you had that mindset, that contrarian mindset that like, hey, a lot of people aren't seeing the vision of what this could be, then you got paid really big. And really the interesting thing is the same can be said even in like traditional stocks, right? So we're talking about using alternatives as a contrarian way to invest, but I could absolutely be a contrarian investor inside of the stock world, right? And we see people do really well when they're willing to push against the grain. But again, going back to your point, it just has to be based on principles rather than on a whim. If we're doing it on a whim, we're likely to lose big. So let's not do that. But if we can figure out what those core principles are and how they apply to us and apply those principles, then we can find ourselves, again, from my perspective, we can find ourselves way further ahead than we would have been had we just kind of stuck our head in the ground, push money into our qualified plans, and, let the market do the rest.
Agreed. And can I say one more thing is that I think it's all relative. It in some ways, it's where your starting point is, because the whole idea of alternative investing for most of America is contrarian thinking at its finest, right? Or even like
that's true,
cash value life insurance, right?
That's absolutely a contrarian view,
where they're saying, "Hey, go mainstream, keep the long-term view, only go in, qualified plans, all this kind of stuff." So getting away from that at all for some people is contrarian, but then for people who have already done that, they're already now there. Again, we don't want to just be always pushing the envelope for the sake of pushing the envelope. We want to push it because, or only if we're finding value there.
Yeah, I totally agree with that. Okay, there's a couple of things I wanted to hit on. Warren Buffett. Everybody knows Warren Buffett as like the greatest investor ever, and
Yep.
everybody knows this saying. And it literally is his advice to people telling you to be contrarian. But he
Yeah.
says, be fearful when others are greedy and greedy when others are fearful, right?
Yep.
So, like, that's a really difficult thing to do. I get it. Like, I'm not suggesting that being contrarian is necessarily easy, especially if I'm like the personality type that just doesn't like to get outside myself. I'm more comfortable doing things, again, that are tried and true. Like, it takes a little bit more. But again, like, that's a principle. Like, this principle
Mhm.
that Warren Buffett is suggesting there, it's not just, hey, be a contrarian for the sake of being a contrarian. What he's really saying is, if you can be greedy when others are fearful and vice versa, that principle will literally create massive investment wins for you. And the reason he knows that is because it has created obviously massive and over again, massive investment returns for Warren Buffett. So anyway, if there's anyone to follow the advice on when it comes to investing, Warren is pretty much tried and true. And if he himself is saying go contrarian, there's probably something to it.
Yeah, and we'll give some specific examples of where that worked out and how.
Okay, so here's my question to you, Rod. Why do you think that most people are just following the crowd? And we'll go back to some examples here in a few minutes, but why do you think most people tend to follow the crowd? And then we'll get into like, some to your examples of contrarian behavior, and ways that we can like use the principles that we're going to talk about and actually apply them. But why do you think people get stuck in that?
I mean, two things come to mind. The first one is it's what they know, or maybe even easier to say, that's all they know,
That's a
right?
good
So
point.
again, the 401k, the stock market, Wall Street, it's just so visible. And for a lot of people, it's just all they ever have seen or heard about. And again, if you follow some of these supposed gurus out there and they're telling you and you're relying on them for all your kind of financial wisdom, then they don't know anything different, right?
Yeah,
So
the mainstream is just so loud.
Yeah, the fish in the water doesn't know what water is, or doesn't know that there's anything other than water that exists out there, right? So that's the first one. And then the second one is that it's so easy. There have been so many ways to just build it in so that you go to work and someone else pulls the money out of your paycheck to put it into your 401k, right? Or you just with stock, bond, mutual fund, you can, with very little money, get into those investments and incrementally build it up. And with apps and with all these different things, it's just so easy. So those are the two things that come to my mind.
And I think the thing that comes to my mind is just human nature, right? Like it's just where we're most comfortable. Getting outside of, like literally what we're saying is when we're going contrarian, this is kind of a tricky one because like you can be comfortable as a contrarian, but if that's not something you've done, what we're literally saying is you've got to get outside your comfort zone. And human nature is to stay inside your comfort zone. That's why, you have some people, some institutions, companies, all that kind of thing that can like do these incredible things while others are just as capable, but just can't get themselves to step outside of it. Right.
Yeah.
And so when I think of it, I really think in addition to the couple things that you mentioned, like human nature is just, we stay in what's easy, what's comfortable, what's safe, right? We don't want the anxious wires in our brain to be going off. And so it just ends up being way easier to follow the crowd. The challenge though is that, and this is a huge one, like the challenge is it's just not working that well, right? Like we always talk about how traditional financial planning is broken. And it absolutely is. There's proof everywhere, right? So many people trying to follow the traditional system and not getting there. So I guess my next thought is like, do we really have much to lose by going a little more contrarian, right? Like we see, and I say we see, maybe people in general aren't always seeing this, but like if you do any due diligence, any research, you can clearly see that there's massive holes inside of the traditional planning model that everybody's using. And yet most people still see it and just stay there. And they hope to, maybe they can save more, or maybe the stock market can do better. Whereas if they could just do a little bit of due diligence and a little bit more have a little more introspection, you know what I mean? And get themselves to like go out of their comfort zone, it just makes a world of difference. And we talk about this all all the time. The risk adjusted return in the alternative space has historically been better. I can cite several different articles and studies that suggest that adding alternative assets to your investing portfolio. And again, that's not the only way to be a contrarian, but just doing that means you're at least somewhat of a contrarian, and it has paid huge dividends. So there's probably a lot of reasons that people end up kind of stuck in the mud, stuck in their ways, but those are at least a few of the things that come to my mind. Okay, Rod, you said we were going to hit on a couple of examples. Kick us off.
Yeah, well, the first one, and this goes back specifically to the quote from Warren Buffett. We're going to go back to 2008. And so let's just break down his statement, right? Be fearful when others are greedy. Well, what was happening in 2006, 2007?
I should have been fearful. Okay. Actually, I was fearful, Rod, but I didn't do it from an investor perspective. Sorry to cut you off. I'll just give
this
you.
Is great. Yeah,
so I was fearful in 2007 going into 2008 that the pricing was going up so fast that I wouldn't be able to buy a house. And I literally made a bad decision buying a house because I was like, I don't know. And I was young. I didn't have a lot of perspective in that moment. But when I think about it, like that's the essence of, so as an investor, it becomes different. But clearly in 2008, I say clearly, it wasn't clear. To some people it was, right? But now when we look back, clearly we should have been being fearful in those moments.
Yeah. And so it's interesting because for you, it was fear of missing out or of not being able to get into a home. But what's greed? Greed is fear of missing out, right? Like it's turning that emotion into, I have to get in because this is it, man. This is the world's going to the moon and I don't want to miss the ride. And so the greed is what kicks in and you're like, I got to get in. And so people went just absolutely bonkers. And then after the 2008 crash happened, now all of a sudden everybody was fearful. And that's when Warren Buffett's saying, now get greedy. Like now's when the real opportunities exist to go out and invest. And to your point earlier, there has to be balance here because we've also given the example of people who thought they were seeing trends coming and put themselves in a really bad position, basically all their eggs in one basket. And I'll give an example. You've talked about the people who were just keeping everything in liquidity for between basically 2015 and 2020 when all of that stuff was booming,
losing out on returns,
missed a whole lot of stuff. Which again, we're not saying that the idea was bad. The thing that was bad is that they had all of their money sitting on the sidelines, not doing anything. That's what I think where we're saying. And I had a similar example that comes to mind of some people who lived in Florida, saw the increase on properties leading up to, I think it was right around 2018. And they said, we're going to sell our home and we're going to rent until the bubble pops and then we'll get in. And again, that's contrarian thinking. We're telling people to think contrarian.
Yeah, we're trying to take risks, right?
Yep. But again, the problem was they were all in on that strategy, and obviously between 2018 and 2021, 22, values in a lot of places, but especially Florida, went through the roof. And so it didn't work out. Again, I'm being careful here because we're saying be contrarian, but we're also saying be careful, right?
Right.
Because that whole, be greedy when others are fearful and vice versa, is a principle. Watch for it and also be careful with it, right?
So there's an easy way to do this. There's a really easy way to do this, and it's simple. Two things I would say. One is just use a portion of your money with your contrarian investing, especially if you're going way off the rails. Now, when I say contrarian, like we're using that word loosely because I don't think like people listening to this aren't going to look at investing in real estate as a lot of contrarian investing, right? So I'm not saying like, hey, we can only have a small portion in these tried and true assets like real estate. But I am saying if I want to be a little bit more contrarian, and especially if it's like against the grain in like a bigger, more meaningful way, I just have to carve off a portion of my assets that I'm willing to do that with. I can't be willing to take the kind of risk that can come with that unless I'm only doing with portion, because obviously if I do that, then I put myself in a position where I could lose everything, right?
Yep.
Like and obviously that's the last thing that we want to have ourselves doing. So diversification helps helps to kind of curb, I guess it curbs some of the issues that can come with kind of the contrarian investing. Okay, Rod, you mentioned that we were going to talk about some of the like success stories, some of the examples that we've seen of people, again, having success, being a contrarian. And we've seen this in history. Like, obviously we can point to individuals who have been really prolific at it, but we can also point to like big trends where if we could have had that mentality, we would have found ourselves much better off.
Yeah. So let's go back to 2008. Okay. And again, Warren Buffett's statement, be greedy when others are fearful, fearful when other people are greedy. Well, but in 2006 and 2007, people were absolutely being greedy. And I just remember I was still pretty young in my career and all this kind of stuff at the time, but I still just remember looking at people and being like, are you really going to take 100% loan against the property? And just not, I couldn't wrap my mind around the reasons why the lenders would be willing to do that. Like there was just so much that was odd about that and just creating this kind of greedy thing happening. And then obviously it crashed. So again, Warren Buffett, you should have been careful and cautious when people were going nuts, being greedy. And then after the crash, okay, great. Now everyone's fearful. There are so many opportunities. You can, pick of the litter and make really cool things happen after that. So again, in hindsight, it's really easy to point to a time like that. But that's also the reason we're doing that is because so many people they lived through it. So they understand kind of the mindset that was going on at the time.
Well, and we should be able to take lessons from it, right? Like I know I was too young to be like a real investor in 2008. So I'm 41 now. I bought a house in 2007, my first house in 2007. And I was pushed by the market myself, but just not as an investor, right? I had the fear of not being able to get my house, the fear of missing out on being able to actually get a house at all. And that's what pushed me in. But again, this was very much not contrarian thinking. The thinking at that time was the market's going so crazy that if you don't get into something now, like you just may not be able to afford one in the future. Right now, as I look at how ridiculous that thought process is today, I'm like, why would you even like as a 22, 23-year-old, like have like, that's just a crazy thought, right? Like we have any idea. I had no idea where my career was heading. I had no idea how much money I could actually make at that stage, but I knew that I was feeling fear about it. Well, okay. So the bottom line is though, we can take some serious lessons from situations like 2008, whether it's me learning to, not follow the crowd, not as an investor, but just as again, herd mentality, I guess. That's really what I fell victim to. I fell victim to herd mentality. And that's what most investors fall victim to. It's been my experience. So again, we have to try to get out of ourselves and figure out where we're taking. Okay, what I want to do, Rod. Actually, before we do, a couple of other examples. We talked about 2008 real estate example. We obviously talked about Warren Buffett's great advice. I feel like there was another example that let's talk about high cash value life insurance. You hit on this really quickly. Obviously, we're huge believers. That's what we do, right? We do high cash value life insurance. We believe in it and we invest through it. But even that principle in and of itself is without question a contrarian buy-in, right?
Yeah.
Because most people are like, life insurance, I'm out, right? We realize that. We know that. And what's really unique though, and this is crazy, like this kind of proves the point. The more sophisticated the investor, the more likely and willing they are to love the value of high cash value life insurance for what it does.
Yeah.
And again, to me, that's like, it's just the most bizarre thing. The people who are struggling to get ahead are the very same people who are refusing to look at things like that, which could very easily add to their investment returns, right?
Yeah.
Like that's what we're saying. We're saying use high cash value life insurance, not because we want you to have more insurance, although that's good, right? We're saying use it because it produces a better return than if you don't. And still people are like, no. Right. And so like, again, there's just so many ways that we can utilize this idea of contrarian thinking to find ourselves way ahead. And I think like the herd mentality and what we've seen through just this massive push to everything into equities in the stock market is proving out exactly what we're saying. So whether you're an investor, whether you're a market investor, an alternative investor, whether you believe like us that we want to take the best of both worlds, regardless of how you're doing it, there's an element or a way that we can be more thoughtful and actually be contrarian. And by doing that, create for ourselves just higher opportunity, right? Because again, we're looking for value where other people don't see it. And that's like what defines, from my perspective, what defines a contrarian investor. Okay, what I want to do next, Rod, I want to talk about the principles. You mentioned we're not just going to be throwing money at a whim. We're not going to just like that. Most people hate that investment. I'm going in on that one. Like, we can't do that. We've got to use some really important core principles. Let's talk through what some of those are.
Okay. Well, the first one we're going to talk about is, interestingly, patience, right? So
patience.
You have to think long term. So getting back to your kind of thought process when you said you bought your house, you and others around you that were kind of pushing you towards this were not thinking long term. And hearing you say that, that's actually what a lot of people are even saying today. These young people, how are they ever going to get into a house with values going where they are and now interest rates higher and all this kind of thing? And
that's interesting. And you know what I'm saying? I'm saying be patient, be a renter, be smart. Don't just go in.
Yeah. Think long term, right? Avoid making just knee-jerk reactions that are not based in reality and kind of like being in control of your emotions, essentially, right?
They
not
are
letting the fear,
typically
not letting the greed take control.
Okay, I like it. So the first one, we've got to make sure that we're being, I like patient persistence, Rod. I like the idea. So while we're being patient, we're still looking for the opportunities, but you have to be, again, not so like gung-ho that you're just willing to jump in at the first thing that looks good. Like, again, there's this balance. And similarly, you've got to use a portion of your assets for that. We can't be using the whole thing. Okay, the first one is patience. What's the next one?
Second one is research. So you said while we're being patient, what are we going to do? Well, let's be educated. Let's learn what data points we want to be looking at, what trends make sense to drive us towards certain decisions. And again, being really careful about not letting the emotional side take over.
Yeah, I think the more research that you do, the more confidence you have in your contrarian position, right? So like, if I don't want to just be sitting around and hoping something comes in my email box that looks interesting. Like, that might be a way to find a great investment that just comes by. But more likely, if I'm willing to put forth the effort, do the due diligence and research, understand principles of, let's say I don't know, let's just say it's real estate investing. There's obviously a zillion ways that I can real estate invest. There's a lot of things to learn. But if I do the research, I focus on understanding the trends, how people are investing, that then does 100% will give me way more confidence to pull the trigger and make a deal, even if it's outside of what so many people around us are doing. You know what I mean?
Yeah. And this brings to mind, in our virtual summit we did a few months ago, Chris Larson came and he said he was going to teach, hey, this is how you can invest in real estate, and gave some really good, I thought, principles, like steps you can follow to be in tune with what's happening in your city, with what the government's saying they're going to do with zoning and with developing infrastructure and other things like that. Well, that drives toward development and therefore investment opportunities, et cetera. And I don't want to hash what he said. Go check it out if you haven't seen it. But my point is that that's an example of identifying a market segment that you want to be in, doing the research, understanding the data, the trends. So then now it becomes principle based when you're going to be going out and investing.
Can I just say, Rod, being a researcher in and of itself makes you contrarian, because so many people aren't even willing to do that much effort, put in that kind of work in order to find the right thing. So if you're even on that path where you're saying, hey, I'm willing to do that, you're like outside of the mainstream already. You've got a huge leg up. And so you'll feel more confidence as you go into that and to the opportunities that you're looking at. Okay, the next one, Rod, we got to talk about is adaptability. Why is adaptability important when we're talking about being a contrarian investor?
Even if you figure out one thing and you get really good at it, you can't let yourself get in a rut, because number one, for diversity's sake, but number two, well, let's just say you stop being a contrarian, right?
Yeah.
If you get stuck in that. And so always keep your mind open, always be willing to look at different things, time the market differently based on kind of the whole kind of Warren Buffett idea. And so you don't want to miss things because you get so hyper focused on myopic on just the one thing that now you feel good about.
Yeah, you brought up a good point, because contrarian investing isn't just about investing in things or opportunities that other people aren't necessarily seeing value in. It could be when we're investing in things, right? So that timing element ends up being, now we're not trying to suggest timing the market in that traditional stock word, buying and selling and timing. What we are saying though is, if I go back to the 2008, there are certainly people who made it big in 2008 as they started to buy, right? So there were people like, I realized that the majority of people, and this is what makes someone a contrarian, ended up falling victim to the massive real estate crash that was. And yet you hear all sorts of stories about people who were able to kind of get ahead of it, understand it, see it, be researchers. I'm thinking of, there's a movie with Christian Bale. I can't think of the name of it, but it's the story about how he saw this huge thing happening and started to make moves. And anyway, like, there are people who did it and who saw that, and because they saw it, they just made massive amounts of money. Because since then we've just had this huge bull market, right? So everything crashes in 2008, and then, just a couple years later, things are just like trucking along, and we're getting way above where we were in 2007, 8, even that quickly. So anyway, that's just to say, like, it's not just about the what I'm investing in. It also can be about the when I'm investing in that. And again, all of these things become easier to figure out if I'm practicing patience, if I'm making sure that I'm continually researching and I'm being adaptable, right? And then the final thing, Rod, that we've got to make sure we have, and this might be the hardest part. I have to call out my inner cowardly lion and develop some courage. But I have to develop courage, because guess what? Even if I've done the research, even if I see the trends, it's hard to know. Like, when we invest, we don't know the outcome. Therefore, there is uncertainty, right? So when that happens, we have to just show courage and be willing to trust the principles that we're living by, and trust that those principles will deliver the positive results that we believe in.
Yeah, and we need to be willing and ready to act when others are hesitating. And so this is the interesting thing, because we're saying be patient, but then we're also saying be ready to jump
be patient
when the time comes. Patiently persistent, right?
Absolutely.
So, because you don't stop looking, you don't stop watching. You're not just sitting back, with your eyes closed, eyes open, being patient. When the opportunity comes, you have the courage to jump on it.
Okay, Rod, those are our primary principles. Is there anything else from a principle standpoint that comes to mind that we need to be talking about, that listeners need to hear if they're going to be successful contrarian investors?
I think it's being willing to step back and being aware of what you're doing. And so basically
there is a self-awareness is important.
Yeah. Am I following the crowd, or am I making the decisions because it's kind of a herd mentality? Am I letting my emotions drive what I'm doing? How can I think differently as it relates to what I'm doing, so that I can, again, not contrarian for the sake of contrarian, but learning to act in a way that helps me get ahead in the ways that I want to.
Yep, I love it. Okay, I'm going to finish, Rod, with this thought, or this challenge, I should say. Okay. So if you're wondering like where you fit on the spectrum, ask yourself the following question: am I following the crowd, and how can I start thinking differently? Really simple.
I like it.
Right? Okay, thanks everybody for listening, and we'll see you next week.
Thank you for listening to the Money Insights podcast. To learn more about the financial and business strategies discussed in this show, please visit moneyinsights.net. The views and opinions expressed on the Money Insights podcast are not intended to be individual financial, tax, or legal advice. Always consult with the appropriate advisor before making financial decisions. And if you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This will help others find the show and learn wealth-building strategies for themselves. Thanks again for tuning in, and we'll catch you in the next episode.